The rise of autonomous mobility represents one of the most significant AI-driven opportunities of our time, with an estimated $28 trillion in enterprise value projected by 2030. Robotaxis and autonomous ride-hailing services will fundamentally reshape the transportation industry, creating a massive economic shift. Tesla is already laying the groundwork for this transformation, with recent reports confirming that the company is actively testing a ride-hailing platform in California, with plans for an official launch next year. The initial rollout is expected to include safety drivers, which aligns with regulatory requirements in certain states. California, for instance, may mandate that a safety driver remains in the vehicle for a set period or until a threshold of miles is met before allowing full autonomy. Texas, on the other hand, likely has more lenient regulations, which could accelerate Tesla's ability to scale its service. While the exact legal framework remains uncertain, what is clear is that Tesla is taking a phased approach to commercialization. Even if achieving full autonomy takes longer than anticipated, Tesla can begin with a human-driven ride-hailing service that still maintains a cost advantage over traditional competitors like Uber and Lyft. The lower maintenance and operational costs of electric vehicles already give Tesla a strategic edge, as EVs are roughly one-third the cost to maintain compared to gas-powered rideshare vehicles. This move allows Tesla to establish a foothold in the ride-hailing market while incrementally transitioning to full autonomy. Based on Tesla's announcements and ongoing developments, the timeline for removing the human driver and transitioning to full autonomy still appears to be between 2025 and 2026, with about a 60-40 probability split between those years. The market's strong reaction to Tesla's latest earnings report suggests that investors are beginning to factor in the long-term potential of autonomy. Much of the excitement stemmed from Tesla's record-breaking cost reductions in vehicle production, achieving a cost per vehicle of approximately $35,100, which further strengthens its competitive advantage. Autonomy remains the primary focus, but humanoid robotics are another major piece of Tesla's AI-driven future. Recent events hinted at further developments in this area, though Tesla has been strategic in keeping details closely guarded. Investors expected a deeper dive into robotics at recent events, but Tesla appears to be reserving more comprehensive discussions for future investor presentations, possibly to avoid revealing too much ahead of commercial launches. For those tracking Tesla's market trajectory, Seeking Alpha provides in-depth analysis and expert insights on the company's stock, technological advancements, and price targets. Clicking the affiliate link in the description supports the channel and offers exclusive research on Tesla's evolving market position. The robotaxi market itself represents a $1 trillion opportunity. Autonomous ride-hailing services are expected to maintain initial pricing levels comparable to human-driven services, ranging from $2 to $4 per mile. However, as utilization increases and costs decline, the market expands dramatically. At lower price points, particularly around $1 per mile, the addressable market grows significantly. In China, where ride-hailing services are already more affordable, rates have dropped to around 30 cents per mile. The true potential of robotaxis lies in their ability to reduce per-mile costs to as little as 25 cents, making on-demand transportation more accessible to a broader consumer base. Higher utilization rates, driven by autonomy, will unlock market potential far beyond today's ride-hailing industry, which is valued in the hundreds of billions. The ability to operate continuously without a human driver drastically lowers costs, expands service areas, and increases vehicle uptime. This is why early adopters and companies that achieve scale first will have the most attractive financial profiles. By 2030, the companies operating large-scale autonomous ride-hailing platforms could collectively be worth $28 trillion, which is nearly 9 times the total value of today's automotive industry. However, the dominant players in this space may not be traditional automakers or current ride-hailing companies. The market is likely to consolidate, with companies that lead in autonomous technology taking the top positions. Automakers, software developers, and AI-driven mobility providers will need to collaborate or risk being left behind. Tesla's full self-driving (FSD) software continues to evolve, with updates rolling out to Hardware 4 equipped vehicles, first before being adapted for older Hardware 3 models. With approximately 6 million vehicles equipped with either Hardware 3 or 4, Tesla has a significant fleet advantage. The company has designed its vehicles with modular inference chips that can be swapped out, ensuring long-term upgradability. While Hardware 4 owners will likely be the first to access full autonomy, Tesla has taken steps to ensure compatibility for its existing fleet. Market segmentation by price point indicates varying levels of demand. At Uber and Lyft's current pricing structure, the total market opportunity sits just below $200 billion. Expanding the price range to match the average cost of personal vehicle ownership, around $1 per mile in Western markets, unlocks significantly more demand. In markets like China, where ride-hailing rates are lower, the global addressable market surpasses $10 trillion. As prices decline below the $1 threshold, ride-hailing services become viable for a much larger segment of the population, vastly expanding market penetration. Predicting the exact moment when an AI breakthrough occurs remains difficult, but Tesla's aggressive approach to autonomy has consistently pushed the boundaries of what's possible. While some critics point to Musk's optimistic timelines, it's worth noting that nearly every major automaker once claimed they would have autonomous vehicles on the road by 2019. The difference is that Tesla remains closer to achieving this goal than any other company. Tesla's approach to FSD has also been notably different from its competitors. Most automakers offering driver assistance features rely on geofencing, limiting autonomous functionality to pre-mapped roads. Tesla, however, opted for a full end-to-end AI-driven model, making it a significantly more complex problem to solve. Despite the challenges, Tesla's ability to improve FSD through software updates has given owners access to increasingly advanced capabilities over time. Waymo, Google's autonomous vehicle division, is another major player in the space. Alphabet has invested billions into scaling its self-driving platform, with additional funding expected to push the effort forward. However, Waymo's real-world driving data remains limited, with approximately 20 million cumulative miles, far less than Tesla's daily mileage collection from its global fleet. This data advantage gives Tesla an enormous edge in training its AI models. Beyond ride-hailing, the implications of autonomy extend into other industries. Autonomous trucking is another emerging sector where Tesla has begun making inroads. The confirmation that Tesla is developing an FSD solution for the semi-truck signals another major opportunity. Autonomous trucks could revolutionize logistics by significantly reducing transportation costs and improving delivery efficiency. Elon Musk has also revisited discussions on flying cars, though Tesla's primary focus remains on autonomy and robotics. While flying cars remain a longer-term possibility, the immediate focus is on scaling ground-based autonomous systems. The economics of personal mobility are undergoing their most significant transformation in a century. At scale, the cost of a robo-taxi ride could drop to just 25 cents per mile, less than half the cost of personal vehicle ownership and one-tenth the cost of traditional taxis. This dramatic reduction in transportation costs will drive widespread consumer adoption. Autonomous vehicles will also be significantly safer than human-driven cars, with Tesla estimating an 80% reduction in accident rates. Most urban driving will transition to autonomous systems, fundamentally altering how people use vehicles. Households that once needed 2 cars may only need 1, while single-car households may opt to forego vehicle ownership entirely in favor of on-demand autonomy.